What's going on, apes? We are going to talk about everything you guys need to know as far as the data is concerned and go over some new information that Ortex just sent to a fellow YouTuber, Matt. You guys probably already know his channel, but we're going to talk about what they said in an email they sent to him, how the short interest of AMC is actually over 18%, and this data may be reflected as early as tomorrow. So we're going to go over everything you guys need to know, as well as touch on the technicals, the Stonko tracker, and the dark pool data. So with that being said, I don't want to waste any time getting into this video. Make sure you hit that like button and subscribe to the channel to help push this information out to as many apes as possible, because I think they would love to hear this information from Ortex and Matt themselves. Now, getting right into it, guys, first things first, I do want to start off with the video that Matt just made, and somebody actually commented on my last video, told me to go watch this, and how Ortex emailed them about the short interest is actually from borrowed shares, from not shorted shares, but from borrowed shares. And we even see that on the Ortex Twitter page. They said 6 hours ago, the unexpectedly high short interest applies that shares returned in this period were atypically not shorted shares, but instead shares that were borrowed but not shorted. So borrowed shares is when you are just selling these shares short. And then there's also, I guess you call them borrowed, but it's selling the shares short. So you're taking them from somebody else, selling them on the open market, agreeing to buy them back at a later date, and you pay interest on that position in the meantime. Now, with all of that being said, I do highly recommend you guys subscribe to Matt and watch this video, because he literally goes over exactly what they said in the tweet, and not the tweet, but the email. We're not going to go over everything. I'm not going to play the video or anything here, but I do recommend you guys check this video out. It is phenomenal information that he did come across from Ortex themselves. Matt also says in that video, basically the reason why he reached out to Ortex is because the day that Ortex had reported there was 12 million shares that were actually covered, this is the day we just sank. We completely dropped in AMC stock, and it really made no sense to him. That's why they reached out and basically confirmed that this was really from naked shorting. So obviously, they said in that video, if you guys watch it, that the data should update tomorrow or in the near-term future. But as far as where we currently sit on the Ortex data, it says we're at 14.42%, return shares of 4.97 million, borrowed shares of 7.12 million, borrowed change of 2.15 million. So that is shares that are additionally borrowed. Take this information with a grain of salt until we get the full updated picture, and the short interest is closer to this 18% mark. But nevertheless, for today, we did see a 2.15 million borrow change. Keep in mind T+2 settlement time, and like I said, take this with a grain of salt. But something else I want to point out as well is the average days on loan is 36.96 days on loan. So that would still put shorts significantly underwater on their positions in between this $10 and $12 range. But this does indicate, to me at least, since the short interest is going up and the average days on loan is going down, that you are seeing brand new shorts get into short positions, while you're potentially having some shorts that actually got in at around this 36-day average actually covering their shares, which is a great thing when it does come to the movement, because these second round of shorts, they're not going to want to be on the losing end of this trade. Once AMC does really start to squeeze, I do think a lot of shorts will exit their positions until they do go severely underwater, like everybody else who previously shorted AMC did themselves. So I think that is great information for us as well, to actually see the average days on loan going down, but the short interest going up. Now, let's take a look at the actual Stonko tracker data. I didn't have it pulled up, but we can pull it up in just 1 second. The Stonko tracker data we do have for this upcoming Friday, we have out the money contracts going up significantly yet again at 294,475 contracts. In the money staying at about the same. It's went down a little bit, but at 70,109. And the out the monies are really significant here, because when you sell these shares short and you want to hedge your positions, that is essentially what these hedge funds are doing, at least the legal ones that are doing this. If they sell calls, right, they have to buy the shares to hedge out that position, to make a max loss and a potential max gain. That is what hedging is. So the more out the money contracts you see, the more delta hedging you will see, or just a fancier way to say shorts actually buying shares, not covering, but buying shares. to hedge some of these options that they did sell. Now, in the money of 70,109. Now, if all of these do expire in the money, and I do think tomorrow will be a good day, so you'll see a lot of these out the monies go into the money. But if we do see a lot of these out the monies go into the money, we should have a substantial day as far as delta hedging or institutions, hedge funds buying shares to cover their ass in case things did go crazy tomorrow. So you're going to see a lot of hedging going on. I do expect tomorrow to be a great day overall. Now, something else I do want to bring to your guys' attention is next week is going to be a significant week for a lot of potential hedging from these institutions and hedge funds and market makers that have been selling these calls. We do have 116,650 out the money contracts, 44,602 in the money contracts. But our next biggest week, and this could be our biggest week that we have seen as far as options, this may even be bigger than June 18th. This is going to be the July 16th day. We already have 184,600 out the money contracts and 90,544 in the money contracts. So especially if AMC share price does start to go crazy, I don't know if it'll squeeze by then. I'm not really trying to put a price target on this or an actual time period on this, but if it doesn't happen up until this, or even if it starts, you're going to see a lot of people flocking to these July 16th options. So this could be a substantial week once everything is all said and done as well. But now let's go to the dark pool data, because I am totally just winging it here, guys. I do apologize, but the stock grid data, and I do just click on the short volume to get right to AMC, and they are always on the top of the list when it does come to volume for the shares being sold short for the day. Now, as far as the net running totals, guys, these are net running totals, so this is a total, not per day. Now, this net short volume is for the day, 3,286,783 net short volume for the day. Net short volume as far as the dollar amount of $186,360,600. Position of 589,317,697 shares. Position size as far as the dollar amount of 29,550,470,000 flat. So something else I do want to point out is we are substantially more elevated than we were during the last squeeze. You could say game squeeze, short squeeze. And now we are seeing a lot of this volume actually going to the dark pools. This is much different than over here. So I do think, in my personal unfinancial advisor opinion, this is not financial advice, none of this video, but in my opinion, you are seeing a lot of shorting that is going on in the dark pools and in the markets. And once you do see some buying going on in the dark pools, shorting on the markets, this is where you get into a weird situation where it's hard to tell what data is true, but it does have a negative impact on the stock price itself. But now let's take a look at the actual technical analysis, guys. And when in doubt, zoom out, right? That's a famous saying for the ape community. Just take a look at the overall uptrend. We are due for a breakout to the upside at any time. We are following this trend line, and we have stayed in a bullish pattern ever since we did start to skyrocket. But we were in a bearish pattern right here, obviously from 77 all the way down to 41. We for a brief moment hit a lower low, but for the most part we have been hitting higher highs, and the fact we have been consolidating and even going down 1 to 3% each day, that we have had down days, is a good thing. Let me tell you why. Because if this was a stock like any of the other momentum stocks that have been running up and then coming right back down, this is not happening with AMC. Just to be flat out, period, it's not happening. 1 to 5% down days, that's not a full-on collapse in the stock price, especially when you factor in what is going on in the overall markets. Most days AMC is down. There's a reason it's down for the overall market, right? It's not just people selling out of AMC. So I don't think apes are paper handing, anything like that. I don't think people should paper hand. I think by the time this is all said and done, we are going to see massive highs well above the $77.26 mark. So if you are in your AMC shares, I am confident you will see a net positive, regardless if you bought them at $77.20 or somewhere in the middle of that to the price we are now, right? $56.70. You will see a positive return on your investment. But I'm not a financial advisor, but I think anyone would tell you it is not smart to rent or risk rent money. But I'm not a financial advisor, so do whatever you want. But I think anyone would tell you it is not a smart idea to risk rent money or bill money. If you need this money, then I definitely wouldn't stay in your positions because there's no telling how long this would take. Now, I'm not telling you to sell. I'm not telling you to buy. That is pretty much the gist of that. But as far as the technical levels that we are looking at for potential downside, this $55 mark has served as a solid support basis over the past week or so, only dipping under this briefly one day, bouncing back in after hours, falling in pre-market, and then shooting back up over that. So I do think this $55 mark will be crucial to see if we stay above this. If not, then you're going to want to pay attention to the 51 and then the $50 price point. But in my personal opinion, we're going to stay over the $55 level and ultimately break out to well over $65 and $77 per share. But as far as to the upside, where we are seeing some level of resistance is about this $60 price point. You can see we've seen this in a wick. We went to about $61 briefly. That was June 23rd or yesterday. You see this wick right here, but we fell right under that just as fast as we went up. So you guys might have not even seen that, and then we came back to about this $58 price point. So if we can get over $60 with some strong momentum, the next level to watch is a $63.78 mark, and then you're going to want to watch obviously the 65 and then the $68 price point. That is where you're going to see some resistance levels, but it all depends how much momentum we do get past these levels. We could break through, and then once you see that, you're going to see a lot of delta hedging going on. You're going to see a lot of shorts that are covering their positions. You're also going to see shorts that jump in and start shorting AMC. So you could kind of tell how the snowball effect could happen, right? Shorts are covering that had already had positions in this that are down, that are fearful that they're going to go significantly underwater in their positions. New shorts get in with a stop loss ratio, right? Say 10%, 20%, and then they're going to cover once you do go up to those thresholds, and so on and so forth, with even more delta hedging that's going on in the middle of this. Mix in the FOMO buying and just people overall investing in the company, and I think we are set up for a massive rally. So that is pretty much all I have for this video. As far as the RSI, we are slightly oversold, and that is kind of surprising, only being down about 2.74% for the day and down 0.78% in after hours, but we are pretty much neutral as far as every aspect you can look at. The MACD is pretty much neutral, a little bit bearish with some more outflows than inflows, but it's not weighed in one direction. When we did have this sell-off, we went extremely bearish in the MACD. Since we have had that bounce and consolidation, we have been going closer, and that is where the yellow CCC line is above the blue line. That is bullish, or when it is below when the CCC line, the yellow line, is below the blue line, that is bearish. But we are slightly below, so we are technically bearish, but we are riding this line, so I don't see it as a too big tipping point in one direction or the other. So that is pretty much all I have for this video. You guys are gonna have to watch the key levels, as well as also I do want to go over the option chain really quick, and this is pretty much what I say in every video, but you're gonna want to watch the every $5. Once you get past 60, you have 30,000 in volume. Once you get to 65, you have 18,000 in volume. Once you get to 70, you have 25,000 in volume. 75 at 6,500, and then once you get over 80, you have 14,000, and then 85, 5,000. But really, once you get over 100, you see a lot of volume. Now, I don't think we're going to go straight to 100 this upcoming week or this tomorrow, right? That'll be the last day of June 25th will be tomorrow. So that'll be when these options do expire. So a lot of these will expire worthless. But I do think the 60s will probably go in the money, and that is only my opinion. But you will see a lot of hedging going on, and that is another reason why I think we'll have a very great day tomorrow. So that is going to wrap up this video. On your way out, if you enjoyed the analysis that I provided, make sure to hit that like button and subscribe to the channel for more videos like this, as well as check out the link down below for public up to $70 in your choice of free stock. No deposit necessary and no need to even link a bank account. And they are one of 2 other brokerages that do not route your order flows to companies like Citadel. The only others are Fidelity and Merrill Lynch, and obviously Public. So check that out if you guys have not already. It is by definition free money. You don't even have to deposit a single dollar. Also, check out the link down below for Webull. Get up to $2,300 per stock, and you get 4 free stocks when you deposit $100. So check that out if you guys have not already, as well as the buy and sell alerts. They literally pay for themselves. So check out those links down below in the description, and until next time, you guys take care.